What will Blackrock's ETF do for Bitcoin and its price? In this video, we're going to break that down. Now, down below there are chapters so you can fast forward to the sections that you want to help you navigate the video easier. Also, this is not financial advice. I'm not a financial advisor. Please do your own research before moving in on the cryptocurrency space. It is very, very risky. Now, I'm going to break this down into a few different components. The first component being when it gets announced, what will happen in the immediate short term. Now, what I want to point out here is when and this happened 5 days ago, Grayscale wins court battle against SEC, regulator must review Bitcoin ETF application. Now, this happened on the 29th of August. Now, the reason that I bring this up is that if you actually have a look at the chart, what happened on the 29th is you had the short-term speculators, people like myself, yourself, people that are already in the crypto space. They saw this as a bullish sign, and Bitcoin ran up sort of 8% in a day. That's where the candle topped out, and then it sort of closed around 6% up. Now, in the crypto space, 6% is like nothing. That's just like a fart in the wind. But that shows you what has actually happened with short-term speculators when it comes down to the ETF. Now, this is pretty well correlated because when the SEC delayed the spot ETF for Blackrock, we then had the exact same thing. The market came back to where it was sitting at. So the market was sitting quite flat here, then ran up, then the announcement of the delay back down. So it shows you that the short-term speculators were hoping to move in ahead of everyone else, and that's when they actually moved in on the call itself. So this means that when the SEC does make the announcement that BlackRock does get the spot ETF, there's almost a guarantee of a pump in some way, shape, or form. It may be sort of 6%. I would imagine we would see a 10 to 15% swing. That's what I would see. I don't think we we could hit a 20. I don't think so. I think we need to get closer to what the price points look like. So we can see another leg up here. This leg up was sort of 25%. So I can see a leg up happening like that, but I don't think it's going to instantly double, triple in price. But we will see short-term speculators flooding in, because when the spot ETF is approved, it doesn't necessarily mean that there's going to be billions or trillions of dollars flowing into the market straight away. The initial pump will be short-term speculators like we saw here. So that is one of the first things that will happen with the BlackRock's spot ETF. The second thing is the spot ETF isn't just going to be BlackRock. Usually what the SEC does is they approve a lot of them at once. They just don't do one. They will do all of the applications. And there have been so many applications put through for a spot ETF. So we're not just going to get one, we're going to get multiple at a time. So it's usually a delay all or approve all. They will very rarely approve one and then knock back everyone else's. So what will happen is we'll see a big flow and effect. This should compound any short-term kind of bump in price, but what it should do is it should put a lot of confidence in the market, and the news cycle should turn, which in turn will then hopefully signify a little bit of a bottom and then kind of consolidate, move it up. So yes, the second thing overall is the fact that it's not just going to be one spot ETF, it's going to be a lot of them coming through at once, which should then be a bit of hype, a bit of excitement, a bit of confidence in the market. Now, look, the third part will be that those initial inflows of capital and liquidity into the market. When the spot ETF is kicked off and going, there will be a lot of liquidity in the market. Now, this doesn't just mean that chart always goes up. Like, I don't think we're going to see a direct straight up like this. This is the 1 week candles, and you can even see that we've had weeks down, even in a bit of a bull run. You can see some weeks down. It's not going to be a straight run up where you put in some money and you're like, there's just going to be an influx of capital and it's just going to run. But it does mean that there will be sort of higher highs and higher lows put in because there will be an influx of capital, especially straight off the rip. But I don't think it's going to be as big and as crazy as everyone thinks, because a lot of these funds that have this money, they're not sitting on the sideline. They're not sitting there with sort of $1 billion ready to buy straight away. What they're doing is they're sitting there kind of analyzing the market, seeing where things are. They're then going to make calculated decision, calculated risks to actually move in on it. So yes, there will be a big inflow of capital, but it's not going to be a one button sort of skyrocket to the moon. That isn't what is going to happen just because of the way big business, big investment firms move. They will be looking at it and they'll be making educated decisions. Now, the fourth thing is the overall supply of liquidity coming into the market. So unlike the first kind of a gold rush of the spot ETF and investment firms trying to get in on the action and the money, what I think we'll see is a steadier inflow of capital, because you need to think that when these sort of funds come in with capital, they're not coming in like the general public and the retail buyer would be, with a little bit of stimmy money coming in, or those points in time where they get sort of tax back. What you're going to have is you're going to have just waves of liquidity coming through, because people that have cash in their 401ks, people that have cash in different funds, they may go into a dollar cost average scenario. And what they'll start doing is starting to put through liquidity. So maybe once a month they make a buy, maybe once a quarter they make a buy. Now, if you then have multiple ETFs and you then have multiple, so if you have hundreds or thousands of funds all buying sort of regularly on these monthly or quarterly periods, just dollar cost averaging because it's a position that they want to move in and hold, what you'll end up seeing is a bigger influx of liquidity, which means that there should be lower pulling back, because you're constantly having the amount of liquidity coming into the market. Now, the fifth and final thing with the spot ETF, I don't think this is a silver bullet. I don't think it's a magic pill that will solve the market and mean that the market kind of runs up and stays high forever. But I do think we will start to see less chopping of the market. What I mean by that is when we have a look at the log scale, we can see that we're starting to get a bit of a curve in what's actually happening in the market itself. So what I think will happen with institutional money coming in, they will most likely be long-term holders. They're not going to be swinging the there will be some that are swinging the 4-year cycle, but I think a lot of them will be buying and holding. Just when you have a look at someone like Michael Saylor, he has been accumulating Bitcoin with no intention to sell, just accumulating and holding. A lot of these big assets and funds, they are looking at 10, 20, 30, 40 year growth. They're looking at growth and timeframes and horizons that us, the retail buyer, aren't thinking about. We're thinking about what can we do to kind of make $1 million? What can we do to kind of get some additional cash to go on a holiday to do that thing within a 12, 24, but like a 4-year period max, which is like an eternity in this big kind of land of institutional investing and funds. They're going to be in a spot where they don't want to be swing trading. They just want to buy in, accumulate it, let it run up higher, post some numbers, take their clip, then keep moving on, keep averaging in. I don't think there will be as high frequency trading with these big sort of funds that come in. When you talk about pension funds, 401ks, superannuation, all of that, I think we're going to be in a spot where there are people that are investing in those that have a bigger, longer time horizon, which then should flatten it out, because you will have less, I believe you will have less chop. It also does mean that you'll have less upside, but also reduce the downside. Now, the final thing, and I touched on this in a video, and I'll put the video up here that I did yesterday about Bitcoin, is that one of the big things about the spot ETF that I think will end up being like the Blackrock's ETF is the legitimization of Bitcoin, the asset. Now, it doesn't matter if you're a Bitcoin maxi, ETH maxi, if you trade meme coins, altcoins, whatever it is. This is good for the space because it legitimizes an asset that you may hold. What I mean by legitimizing an asset right now, if you want to go buy a home or get a loan or do something, banks aren't going to see your cryptocurrency portfolio as an asset. They don't see it. To use that, you are going to need to sell it, pay taxes on it, prove where you got the money from, which will be, they're not going to like that, and then use that to get a home loan, get loans, things like that. When we have a place where a lot of institutions and a lot of companies can be buying in to a spot ETF, end up having essentially crypto on their books, what it would then mean is it means that there should be a point where banks and lending facilities in the traditional world will start to look at a cryptocurrency portfolio as something that can be lent against. which means that all the crypto that you're holding ultimately doesn't need to be sold. It could be loaned on. You could get an equity line from it in the future, which I think is where you really want to, which is where I really want the space to move. And I understand that people out here are going to be like, yeah, but Bitcoin's meant to get rid of the bankers, rid of all of this. To buy a home, cash, you're going to need what, $1.5–2 million. Like that's just what you're going to need. To sell, pay taxes, closing costs, all of that kind of thing. If you can then hold your asset that you believe will appreciate, but then also not have to pay taxes on it because you can then get a loan from it, you're just in a win-win situation. So that's where I believe the ETF becomes a legitimizing factor of cryptocurrency as an asset. And when an asset is seen by financial and banking institutions as a legitimate asset, it should then put everyone in a place where they can actually lend against it and start to make just use the asset and the tool the way that they want. So that is my breakdown about what will happen after the Blackrock Bitcoin spot ETF is approved. Hopefully you found value in this video. If you did, go down there, hit that like button, drop a comment and tell me why you love and or hate Bitcoin and all of the reasons why I am wrong. I would love to hear them. It's been a pleasure having you with me. I loved making this video. Hopefully you enjoyed viewing. As always, until next time.